Morning traders, welcome to the Traders Lab. I'm your host, Tom B. We have a lot to speak about today. Sorry for missing yesterday. There were some technical issues over here and with Rhythmic. So had too many gaps in the data to make it worth your time. But I'm here today. I'm going to go over what happened yesterday briefly and how it's set up today, and also structured trades that are available to all of you in the Bookmap Discord Trader Lab community. I'm going to focus today, besides the trades that are taking place that you can vet and also gain an understanding of in the Trader Lab, the mechanics of the market, how the market works, why it does what it does, how you can get in alignment with it, and how the auction works and the volume profile. I'm going to take you in a few different places. I'm going to try to move as quickly as possible. Now, because of the speed of what I have to do, it may just overwhelm you if you're not familiar with these concepts. This is really about market mechanics. How does the market work? How can you get in alignment? And how do you integrate a high-tier order flow tool like Bookmap to help you potentially develop a better edge, better entries, better risk management, and an understanding of a full picture of what's going on? Price does not operate in a vacuum. All prices are not created equal. If you're using candles, you're missing a substantial amount of what actually is going on in the market. Now, if that works for you, that's great. But most of us have all walked in your shoes, and most of us have found maybe tools that give us an edge. And we also understand, and one of the reasons I created the Trader Lab is why retail traders fail. And we're all subject to the same elements, the same psychology, and the same misconceptions of this business. If you're interested in building the business of trading, while nobody can guarantee you will be successful, I think you can really accomplish a lot on your journey if you spend some time in the Trader Lab, and there's no cost for that. So let's get going right away. Grab a pen and paper and be sure to review this stream if you find it of interest. And there is not only the Trader Lab community, but a library of webinars, a document section, and a lot more in the Bookmap server and the Trader Lab. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. And if you have questions, please post them in Trader Lab or in YouTube. I will do my best to get to them. If I can't answer your questions in YouTube, feel free to use the link down below to visit the Trader Lab community. There's no cost. You won't be solicited, harassed, or otherwise abused. Now, a couple things going on. Right now, exclusive in the Bookmap server in the special events area, Bookmap Academy coaches are doing pro trader webinars. These are the guys that if you go to the Bookmap Academy, they actually act as coaches. And the reason they act as coaches, they've demonstrated expertise that can maybe help you expand your understanding of market mechanics and give you some, you might say, objective reviews of your trades. And there is no cost for this, but it is available. But you have to confirm your Discord username to gain access to these. So, and this is only going on for this week. So there's one today, and then there's one tomorrow, and then, as they say la guerre. Now, here's something else that's brand new. Bruce's pilot program. How do you extract an edge? Now, in Trader Lab, we always talk about edge because that's really the business you're in. It's gaming business. This is not be right, predict, get confirmation. That's a psychological need. This is not that business. This is a completely different business. And if you're trying to meet your psychological needs, I don't think you're going to be in the business. The failure rate for retail traders who try to meet this psychological primal need of avoiding risk and getting certainty is, in my opinion, assuming they actually do the work, and they still are trying to create certainty, I don't believe they're going to succeed. Now, maybe you will. From what I've observed over 46 years, Not a good probability. So then why is there a problem? It's because this is not a business of certainty. This is a business of 100% randomness, 100% of the time. So casinos are in the same environment. What do? They only play games with an edge. How do you get that edge? You might be able to get it in the Trader Lab and in Bruce's pilot program. Just saying. Something for you to potentially find out more about. Now, I'm going to jump into the profiles and the auction. Focus and review this because I can't spend a lot of time. Last thing, did you get your photo in? You can win a free month of Global Plus, and it's open to everybody. Just use the hashtag BookmapPeps and then drop it on Instagram, X, or LinkedIn. There you go. And welcome to the Trader Lab. Now, higher time frame. Let's talk about this. This is the auction, and I don't have time to get into detail, but this potentially is a week high. Isn't that like a double top? Tops in bull markets, and I'm not saying it can't be the all-time high, but they're not made this way. They're made with excess. Is this excessive or just, I need a vacation? I need a rest. I've been galloping along. And what does the market do? The market goes up to go down. This is FOMC day with a wick. And then it goes down to go up. The market goes up to go down. And then it goes to go up into the wick. So all this is in Trader Lab. But let's look at these levels. Let's talk leverage. What are the key levels? Remember, 70 was too low. Remember, 6701. These are outside edges of distributions, and I can't spend time, but let's look over here. 81 was too low. Notice we had our buyers. It was a target on this day coming down. I think it was the day before yesterday. Can't even remember. Yeah, it was actually. That was our target for shorts yesterday. 70 is the next target, and 6661 key level, then 49, and then the 21. No precision, horseshoes and hand grenades. I'm going to run quick. Review this. Now let's look at what a market profile looks like. This is the same thing, but I'm including the old school market profile, and I'm including the volume. So you're seeing it from a little different picture. Same levels. Let's take a look at these levels. This is the all-time high, that week high. This is a low volume zone. The market auctions, it rotates. Well, if we find too high, and nobody knows, and this is the outside edge of this upper volume, if we open and we go, not so much, and we come below here, which was the outside edge, this is shopping. Oh, it's on sale. I'm not paying that. You see how it works? And then because this is not auctioned, what does the market potentially do? Once we get under here, it's we're out of here. And we fill this in. Now we come to the next area, which is this. What happens here? We get under it. Now we have another low volume area. What do? Hasta la vista. Thanks for playing. You get a coupon to the buffet. And what about this? What's under this trend day up? Sell stops. You see? So what do we get? We get the stops. And then we get some short covering. But on the day, follow this very closely. On this day, when we did the Acapulco cliff dive, what is this? Another low volume area. And what's this? It's called a single. What a single is a 30-minute time frame or bar, if you want to call it that, and we never filled it. It leaves like a gap, and that creates urgency. So you have the low volume zone, which tends to get filled, and you have this as an outside edge. And so where is our high of yesterday? It's up here. Too high. We fill the low volume over here. I'm out of here. You got to be kidding. Where's my stops now? Under this low, high probability. Up here, gives you the short. This is called a distribution. If I break away from it, another low volume zone, another single around, I don't know, I think it's 5 or 6, low volume, hasta la vista. Okay, yesterday's low. Levels below 62 and, let me see if I can get back here. 62 there, that's a target, and then 49, and then into the wick, and that's part of the thrill. Let's keep working. Let's move it. Okay, 1 second. Okay, trying to go as quick as I can. I hope you're getting something out of this. Feel free to review this. Now, this is the ETH. ETH. This is yesterday's full session. So these are full session. Where was my resistance? Wasn't it at 30? Remember the chart I just showed you. Review this because I can't take the time to flip back and forth. You can do that. Too high, low volume zone. I'm not paying that. I'm out of here. Take out that low. Now what? Low volume zone. Single. I'm out of here. What do we do today? This is today's ETH. I'm not paying that. ETH high. Where do I go in the ETH? What was that level? 61. Single. Watch. 61. RTH open. 61. Hasta la vista. Thanks for playing. You get a coupon to the buffet. This is the Trader Lab. Hope you're getting something out of this. Please leave a like if you're visiting in YouTube. I apologize for the being speedy, but too much, not enough time. If this is interesting to you, remember what this is about. This is market mechanics. How does the market work? Now, I don't use any indicators in the traditional sense. What I found was, as a developing trader, same as you, we all gravitate to let something else do the heavy lifting. But most retail traders don't succeed in this business, and there's a lot of reasons. Assuming you can create a trade plan, so you know where you're going to trade, what that trade is, it has an edge. Now you're in the gaming business, and hopefully you're not just playing a video game here, or you're a gambler. Most retail traders don't even know they're gambling. They just look at an indicator. Indicators are not aware, they can't be aware of the condition of the market. You have to understand how the market works. The indicator's not going to solve it. And what we tend to do is load random inputs to create certainty. Remember I was talking about the psychology. Normal, why? You're wired to do it and you're not even conscious of it. That's one of the major obstacles because you're trying to create something that doesn't exist in this business. Let's go to what's successful business model. Gaming, how casinos operate. They don't play blackjack differently every time they deal. They use what I called anchored inputs. You can't measure anything if you have random inputs. Most retail traders are throwing the smorgasbord against the wall and hoping that the random outcomes, the same as the gamblers have, because gamblers win, but they don't have an edge that over time, even though they're going to have winning trades, they're going to keep compressing, tuning, tweaking a process that does not have an edge, even though you're going to have winning trades. That is a recipe, in my opinion, for your way out of the business. It's the path for failure, and I'm saying that, but again, you might be the exception. I'm doing this 46 years. I've seen it happen not only to myself early on, which I couldn't understand why I couldn't fix it. Are you trying to fix something? How about if the process is defective, you can't fix it? If that's your experience, I coined a phrase called Trader Groundhog Day. Work hard, wake up in the same place. Is that you? Then it's not your intent. It might be your process and what your beliefs are. Your beliefs, if they're not aligned with this business, you can't fit this business into what you believe it is or what you want it to be. You need to adjust and adapt to the business. Now, remember the 61. Remember that level. What was, you know where it came from. And if you missed it, you got to scroll back when you review this. This is the ETH volume point of control. This is called a naked volume point of control. And if you're sensitive, close your eyes. Hold on a second, guys. I got to turn off some levels that are current that we don't want at the moment. By the way, right now, if you were in Trader Lab and you had an edge, the trades I've shared, which I call structured trades, are delivering for the traders that have worked it out. Other traders are patiently waiting for their trades, and other traders are responding to emotional stimulus, FOMO, and the rest of it, revenge trading, and they have not yet mastered the biggest problem. I believe anyone who comes to Trader Lab can learn how to trade. It's a personal belief, doesn't mean you will ever be successful. Because you can learn how to trade, and your biggest obstacle is not going to be learning how to trade. It's being able to trade and manage your emotions. Your emotions are the great unknown and the last thing traders think about. They're all looking for setups, certainty, right? But that's not the problem. You come to Trader Lab, there's 60 PDFs, a library of webinars, and of course the Trader Lab community. We leverage each other's collective experience. It doesn't matter how long you've been in the business or what you do. Now, if this is too high, remember, trading is shopping. This is not, that's why you already know trading in a high time frame. It's shopping. What does the market do? What's too high? What's too low? And what's fair? So in all fractals or rotations or time frames, depending how you want to define it, the market's always looking for too high, too low, fair. And that happens in these rotations. So my time frame might be high. Yours might be trading this kind of thing. Not my thing, because I like to trade less and potentially make more. Less trading, more range, more risk reward, and I still always will take a stop because it's overhead and cost of production. Casinos pay gamblers. I think they deal with it pretty well. So what do we know about this? If this is the retail price from the ETH and it's equal to this, there's a couple possibilities. Now, it's a gap. So what does that tell us? Well, this is yesterday's low. There's a possibility to fill the gap. Okay. So I got that on my radar. Now I'm going to take you into the opening trades. Now, these trades have to be vetted. Some of what I'm going to show you here in the stream is the last place a developing trader should trade. The primary trade that I suggest, and again, doesn't matter, what I say, it's absolutely irrelevant. What's relevant is, how do you start in this business? What would be the first trade to develop? Because if you can't prove concept and develop the discipline for one trade, then you'll do none. So the process, at least that I've laid out for developing traders, and this is over many years, not just in the Trader Lab, is one trade. And the reason for one trade is, again, proof of concept and market mechanics. So you're putting all these pieces together to create statistical probabilities. Once you understand how to do that, you replicate it with other trades. Now, when I say one trade, I'm not saying you only take one trade. I'm saying let's do the primary condition the market is in, which is rotational, and let's develop a plan and a trade, and I call it mean reversion, that shows up every day. And if you have a trade that shows up every day, you're going to have multiple opportunities for that trade. And the part about trading is not impulsing in. It's stalking, waiting, anticipating, defining it. And when it shows up, you put your helmet on, you close your eyes or open your eyes, and you're willing to take a stop, because that's overhead and cost of production. You can't run a business unless you're willing to pay. Does that make sense? So taking a stop is not a personal failure. If you have a plan with an edge, it's actually the cost of extracting the edge. It's not a right or wrong thing. Do you know that? Or how do you experience it? Oh, I took a stop. I got to make it back. That's a way out the door. That's not the business. That's your emotions. Do you know the difference? Now I'm going to take you into the first trade. I can't spend any more time. So what do we know? Not what will happen. What do we know? Hold on. What is going on? 1 second. Whoops. 1 second, guys. A little pilot glitch here with these levels. I'm trying to get them out. How are we doing in YouTube, guys? Are you guys conscious? Thanks for visiting the lab. If you're getting something out of this, don't forget to give a like. It encourages me to keep doing this and potentially create some additional content. But I do need encouragement. You know, when I'm doing this, I'm not trading. And I kind of, you know how that is, right? It seems some of the better trades show up as soon as I start streaming. I think it's just a plan. I don't know what it is. Somebody's out to get me. So, too high. This yellow line. Now, this is very aggressive. This is the opening trade. This is not for developing traders, but I'm going to show you the potential of where you can go. Okay? So, we gap lower. Now, statistically, and I can't spend time, but there's a boatload of statistics which you have to vet. There's about an 80% probability I check this level. There is taking the previous high or low, 68% level, and that is the gap fill. Getting to the, 68% for the previous low. Taking out the first hour's high or low, a 65% probability. It can do both. It can do one. Who knows? And there's more. But the lean is to the downside, except, now here's the except. This is where you got to be thinking market mechanics. What has the market been doing? Going down. What does the market do? Go back to the top of the stream. The market goes up to go down. The market goes down to go up. Weak high at the all-time high. What does that suggest? Weak longs are thrown under the bus. Now we have shorts. What does that suggest? Potential at some point, not today, who knows, that doesn't matter, to take out that all-time high. So what is the market doing? It's going down to take out the longs to get the shorts, which gives us the fuel to go up. So in the morning, what are we doing? We're taking the shorts. To do what? To get long. For what? To squeeze the shorts. Does that make sense? Market mechanics. And what else? Clueless. Okay? So, open. Teeth chattering. What are we going to do? Tom? Am I going to open and squeeze? Now, this morning in the Trader Lab, first of all, everybody posts charts. We all get our brains aligned, and everybody does their own thing. We're going to have traders that are buying, selling. We got whirling dervishes. We got everything but the kitchen sink in the Trader Lab, because it's not about this. It's about you. But you got to start one place to be able to build out a business. And if you can't do one structured trade, because it creates all the elements you need to move on to more trades, then you won't do any, because you'll be out of business. Sorry if it sounds harsh. It's just true. So you're always going to get the straight oil from the can here. I've gone through too much in my 46 years, too much wear and tear and pain. I'm going to tell you that, because I came into this business with beliefs that are not aligned with the business. But when I started in 1980, there was no information. You bought a book. That was it. No PCs, no internet, not a Zippo, So that's where I started. So I'm going to say I started a big disadvantage. Now, you guys have a big disadvantage. There's so much nonsense and snake oil out there, you may run out of time and dollars before you find out anything that's workable. So let's look at the behavior. Sweep. Now, this is the open. You get this. We get VPOC migration. I'm going to label this. Now, this is the last place anybody ought to trade. And I always say this, but of course, if and there's a reason. Too fast, no structure. But we have some structure. So the way the market tends to work is, this is the retail price. Think of it, high volume is retail. What's my tuna cost? Well, this was previously too low. which is why we went up from it. But if I get open and it's now too high, and this is the last retail price or high volume from the ETH, if it's too high, what am I doing? Going down. And remember what else I know from the ETH. This is the RTH open. You got to see how the pieces fit together. This is the ETH. Too high. So I have too high in the ETH, and this is my target coming down if I was selling in the ETH. I have a low volume node up at 70, whatever this is. I can't say it, 66.78. Remember that. I have this, 66-ish, 01-ish, 02. And overnight volume point of control. Now, this was taken around 6 in the morning. So now I open, and there's my test. So my short is setting up here. Now, I don't know that. So when it breaks here, variable high volume node, here's what I know. This is my opening swing high in this. So I know I got resistance here, and I got my sellers, I got my buyers. And it's very risky, this trade. So I just want you to know it's a high risk trade. And I always tell traders, if you're going to build out a trade plan, this is the last place you trade, because you have to be unconsciously competent to trade this speed. So this is too low. This is retail. This is too high. VPOC migration. I'm going to show you now this, if you can do it. And look at this. We're in 11 seconds. So can you operate in 11 seconds? You will not unless you're competent. So this is a potential short, and you'd be getting in down here, and your risk would be up here. And then there's another one you'll see. This is called VPOC migration. We're still working on this long. So this yellow line shifting, it's a language. I don't use indicators. So what I'm doing, all I'm doing is the same thing your indicator does, except I'm the indicator. I'm reading a language, and that's what order flow does for you. Let's look what else you see. See the liquidity coming down? Think of that like a hand pushing. It's a skew. These guys aren't looking to trade. What are they doing? Push it, push it. This right here, so we have our VWAP. We know this is too high. We now have this, an outside edge. So we have our VWAP, and we have our mid. We have a sweep here. So I have a sweep. So what I'm looking for now, I have to go look back and see. So here, this is resistance up here. Okay, don't forget that. Outside edge, mid. This is a potential short. And where's our VHVN? Remember where our resistance is. It's here and outside edge. So let's just look. So this is a potential short to there. Then you're looking to come 49. If not, I didn't get this one. I got this one. This is my short. And let me show you why. Here. And I can't spend, again, a lot of time. Let me draw this out for you. I just want you to see some ideas. This is a variable high volume node. I made it up. I made this process up because who knew? And many years ago, because I observed behavior, nobody was talking about it. It's like, what does this mean? Too high? So how do I know it's too high? Well, I don't know if it'll still be too high. I know this is where the high volume is, and we leave it. I know this was too low, and it moves up here. Support, resistance. Well, if I'm in a gap and I'm underneath this level, right? That's the same thing, except this is static. This is developing. So I'm doing a similar process, but now I'm in real time. So this thing's going to move around. So what do I know, Tom? I know that's too high. I know that's too high. And I know anytime I put a trade on, I can take a stop. I know this is a potential short, and this is the scale. So if you don't get in on a timely basis, hasta la vista, you're out of luck. It doesn't fit. If then the next location. Now, right here, I don't have a trade. I'm thinking emotionally, I'm going, you missed it. You shoulda, you shoulda, you shoulda. And I've learned to ignore the shoulda because that's a lunatic. In hindsight, it's always clear. So let's look. Location, icebergs, pick, mid, resistance. So I got resistance, resistance. So when I put this trade on, I'm always going outside the next layer of volume where it was too high. There's my location. And this is where it would fail. Above here. Not there. Not there. Here. That's my short. Scale. 49 is next. And then runners. Anyway, what can I tell you? That's a trade, you know. Target. 35. Okay. That's the first trade. I know it's not exciting, but what are you going to do? Is everybody with me? How are we doing in YouTube? Please give a like if you find this useful. I really can't spend a lot of time on these elements, but you can learn all of this. Now, so this was where I was looking to go, and no idea, because the idea of the trade was to get into this. And 21's the outside edge. So this was urgent. And we know this is too low. This is FOMC day. We didn't get their stops. So this was I call this an inventory grab. In other words, blow these guys out. But see how this works? Market goes up. Hey, we kick your, you know what? We take your inventory. These guys get taken out, except them. What about up here? Who's getting taken out? These guys. If I don't get under FOMC day, then it's the squeezeteria. So longs under the bus, then the new shorts in here become the buyers potentially to take us to new all-time highs. And it's a guess. I'm going to say educated guess, but random. So not our job. So now, trying to remember. Oh, yeah, here we go. This is called VPOC migration. It's going to be important. Let's label it together. What is that yellow line? The retail price. If we think the trend might be down at this point, then what might we do? Well, it sets up something called mean reversion. This is a reversion trade. And what it means is the market will go up somewhere, squeeze these shorts. Remember, the market goes down to go up. The market goes up to go down in all time frames and fractals. So now we have a structured trade in the Trader Lab called VWAP to VPOC. Now, everybody needs to understand something. This is not mechanical. This is location oriented. Let's take a look. If somebody takes a short, this is where you're trying to go. And then potentially to test lower. So let's see. We have stops at the VWAP, stops at the mid, and let's go see what else we got here before I go any further. And we have 49. So now I don't remember because I was posting vehemently in Trader Lab this morning and trading, which is, I'm going to say that's the definition of insanity. But once I get a trade on, since I trade for higher rotations, 49 is a key level. So my next trade was not here. I'm looking at components. Sweep, I mean. So I have a buy sweep, which can, at times, suggest counter rotation. I'm now, and this is current at the time, level in a higher time frame and outside edge. This and highest volume price here. So if in the developing time frame, this is now what the high volume is, then the possibility is, remember, I'm not paying that. Back to retail. If I get back to retail, then I can check for what's too low. And right now, this is the low of the day. So are we going to come down here? I don't know. What do you think? I don't know. Let's see. So now I have a sweep and I have my outside edges up here. This is my area. No precision. This is trading. This is my area for a short. So I have my sweep, and now I have my micro high volume, and I have my outside edge. It's called the low volume node. Location, location. This is called mean reversion. Mean underline, because you're trying to pick an outside edge. I got short before this. So this is where I got short. Over here, actually. Like right around here. And my stop is not there. Where's my stop? Good question. Out here. Here. Variable high volume node. Why would I put a stop there? You're asking. Because it was too high. So if I'm going to put a stop out, I'm going to put it where I know at the time the shoppers in the S&P store said, I'm not paying that. And now this is the fair price. So if I come outside and I'm coming out to 49, which in a higher time frame is too high, let's look at what I'm doing in multiple time frames. At the open, that was too high. And the target, one of the targets coming down was 49, remember? Then I get below it. What might be resistance? 49. But what about the intraday developing time frame? Too high. So I now have an outside edge for mean reversion. So this is my short. My stop is above here. So that's a short, that's a scale, helmet. And then looking for out here. Managed the trade, got taken out. That's perfectly fine. Now, the way this works, let me show you what I did with this thing. So this to there, and then I know I have the low of the day here. So I'm right here. I'm just going to show you, and this is not anything other than what I did. I'm not saying it's a good idea, you know. But here's what I know. Let's go back to what we know. The market goes up to go down. The market goes down to go up. I'm really stretched out, and the market is short. That leads us to something called potential responsive buying. And when we had the FOMC Acapulco cliff dive, if you remember, what created that big wick on that candle? Responsive buying. They responded. Oh, it's on sale? Really? I'm going to throw 20 S&Ps, no, maybe 2,000 S&Ps in the cart. I'm going to throw thousands of S&Ps in the cart. So the market went down, blew everybody out, and then the buyers came. Well, what might be happening here? There's my 49, and if I come back above it, maybe I got too low. So you can kind of see, I think, how I'm layering these things together. There's my 49. There's my 49. There's my short, and this is the current retail price. I come under here, and now the teeth are going to start to chatter because I know anybody who's in this leg, and this is how I think. I always think from both sides. I'm thinking when I join a rotation, where's the stops going to be? Well, they're going to be up here. And 49 is a big deal, and so is this, a low volume node. So all of this is important. to come there. Then I get there, and then it's what happens here. Because I have 21 as an outside edge. So this was going to be the target, and no clue. Not my job. Now I see a sweep. So right here, this is like my first early warning, and this is where order flow can really be helpful. I see a sweep. Now the sweep is suggesting a potential exhaustion. And I don't know. I got my sellers. I got my iceberg. I'm as clueless as everybody else. I always use the term clueless, not to depreciate myself, but to keep my mind open to the reality that I don't know anything. I only know what might happen. When I see this, it's the first suggestion that a counter rotation might be on the table. Now let's go a little further. What do I know here? Variable high volume node. Too high. Watch. So now I'm using the same concepts in multiple time frames. This is too high. Well, what about this? Watch. See the behavior. See if you don't see something that is logical. Remember, we're in the supermarket. Trading is not complicated. It's not, but it's random. There, as they say, is the rub. So, too high. I'm not paying that. Get out of here. We leave. We come back up. This is resistance. You got to be kidding. Lower. Now, too high. See how it works? So, too high. Retail. Oh, let's go. No, it's still too high. Too high. Sweep. Resistance. See? Break. Uh-oh. Game over. So when it crosses here, this trade is over. Okay? So this told me, or suggestion doesn't tell me anything. It suggests we have a problem right here, and yet this is resistance, you see. So as soon as we came above this one's over. And that's okay. That trade paid, And then it's now what? Trouble. 49 change. So now it's what's happening? This is now my buyers. So now and where am I again? I'm above my 61. Off to the moon. I don't have a trade. I'm sitting here going, But now I have to wait. Liquidity comes in the book. Let's watch. And what's this? Don't you remember that the 61 was so important? I have a sweep. I pull back. And what else is this? Wasn't this my opening swing high from the open? Wasn't this the high? And then we went south of the border. If we come back across, what's above the high? The gap. If I have a gap and I now come over and I test this, which was what? Too high. Isn't it possible that what was too high becomes too low? What was too high becomes too low? Is it possible that was too high becomes too low? Is it possible if I get my rotation, and there's a sweep, I can get long here against this for a long for the continuation? That was a long for me. Say Laguerre. VPOC migration. What does that say? Language. This is a foreign language. Do you guys ever try to learn a foreign language? Yeah. Well, takes time. How about playing a musical instrument? Takes time. So here's what I know. What I know is I have yesterday's low. I have yesterday's low is here. So this is the target. Now I'm going to show you some more trades. So now I have a new retail price. Too low. Wow, look at this thing. We're above the 49. We're above the 60, which is what we sold. There's fuel in here, and if we get into yesterday's range, it's going to be more abuse for the shorts. In the meantime, we still have this gap open, not by much. So I'm going to show you longs. So, if you didn't, for me, the first long is like over here because of this right here. But that's besides the point. Now, what is this? This sets up a condition in the market called mean reversion. Mean reversion, which is the primary trade, and look where the locations are, here, out here, and we're above 49. So when we rotate, the trade becomes to go from there to there. And look what we have, liquidity. Does this look familiar? Stacking liquidity. So now we have alignment. Location, location, liquidity, liquidity, outside edge, VWAP, mid, alignment, long. And this is where you're trying to go, okay? And there's more. Let me get this squared away here. At 9:30, so I have to go back over this. There's about a 98% probability-ish that we're going to take out the first hour's high or low. Pick one. Well, considering we found our buyers, statistically, 98% probability for the first hour's high or low, this sets up longs because now I have a statistic and we have the gap. Because what is the probability of checking yesterday's high or low? 68% probability. So I got over 98 to go here, and I got a 68 to fill the gap. What does that do for me? Long. And that's only me. You could be trading both sides, either side. We have traders in Trader Lab who are whirling dervishes. They're going to go to short. They're going to trade the long. It doesn't matter. But if you're a developing trader, one side, because that creates discipline and you have less trades and less risk. When you think less trades, if you're thinking less profit, wrong thought. Because right there, that's Hyde. That's the lunatic. That does not serve you. It's better trades in alignment with the dominant side. Counter rotations are really picking off the weak longs in here. What I do, well, let's just say primarily what I suggest is that you use the weak side getting taken out to position with the strong side. Does that make sense? That's why we were taking shorts. Get the longs out. Now, turn the barge around. So this is a long setting up here. Here's what sets it up. This and this. This is a long here also. This microstructure, so this is a long. There's the entry right there against here. See it? So chop, 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 micro structure. I'm just going to go down in a micro structure. This is what you can learn in Trader Lab. I'm going to just take this apart a little bit for you so you can see what this idea of a multiple time frame is. Think Russian dolls or Matryoshka dolls. So this is chop, 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 chop. Sellers are here. There's your icebergs. The buyers are here. I'm at a location and I'm over here. Now, break high. Demand. What happens here? Sweep. A sell sweep sets up that, and it doesn't have to. Where's my support? There and there. In here. And you can get this. I've done many, many streams and webinars on this stuff. There's a ton of them in the library at the Trader Lab. This is where the buyers took control. These sellers were absorbed. This is where the order flow comes in. When you see a red bubble, it's aggressors. Who are the aggressors? Sell stops, market orders. And who knows, But when I see an aggressor, why isn't the market going down? It's because the buyers. You see the buyers? Okay, so I know I got support here. I know this is my retail price because that's my micro high volume. Same auction. Too high, too low, too high, too low. I'm down in a short time frame in alignment with this. you see? And that's my little retail price. This is your convenience store, the little store down the street. Break high. What does that tell us? The language of the market. Too low. Sweep. Too low. Support. Long. All right. Where to? Great question. Oh, I remember where this. 70 was a big number. I forgot where this came from. Let's come back. 70. Big number, right? 61. That was our short. Going down to 49 and then, 30, wherever it was. And then 61. Get over to 61. Then you're going to 70. Get over 70. Maybe back to 81. Huh. How about that? Magic? No. Random. But structure. Long. Watch. VPOC migration. So now what? Too low. Outside edge. Too low. What else? North. So what do we do? So if you didn't get along here, which was against this, that's fine. The next trade is called mean reversion. It's outside. And you at 9:30, you have that stat that says there's over 98% probability to take this out. You see how you put it together? Trader Lab. Now, where do we get long on this thing? Oh, well, we got VWAP. So this is a long. Up to you, If it's not your trade, then you can hang out. And the next trade's going to be out in this area. Variable high volume node, VWAP. Structure. This is a long. Where are we going? There. Okay. Long scale. This is called VWAP to VPOC. It's a reversion trade. Remember, the primary trade's to learn. Reversion. This is a long. Where to? There. What about our 98% probability? There. And then put a helmet on. Who knows? VPOC migration. Let's watch. So, watch here. Too high. Or retail, So, it's trade management. Now, let's watch. What does it say? Let's look at the language of the market. Language, guys. Language. I haven't been able to look at your questions. I'm trying to get through this. So, what do we know? What do we know? Not sure what we know. One moment here. Trying to get some of this squared away. So let's look at the profile for a moment. I mean, this is language. So you want to speak a foreign language? I know we all want plug and play. I know there's no Google Translate. Wouldn't it be nice? Sorry, Charlie. So VWAP, mid. So what do we know? There's stops here. There's stops under here. What else do we know? 49. What do we know here? Well, sweep, counter rotation. Now, what we don't know, and never will, is are we going to fill this gap and squeeze these guys out? So that part we don't know. But let's look at what else we know. Market's long now. Shorts got squeezed. So now the longs are in here. That's what creates your rotations. What we need to be thinking about is how far out might we come and where might our trades show up? So, and part of the thrill of trading is we don't know anything other than what might happen and where. That's what this is. What will happen? C'est la guerre. Outside edges here. So we can come out here. We can pick these guys off. And then we want to see, you notice this liquidity. We want to see what happens in this area and this. So there's no precision. So we're going to be looking, and the trade, if it comes around, and this is our outside, see the low volume? Think of it this way. I'm not paying that. All right. Too low. So the market can do what's called mean reversion. Any trade we take is trying to come here. So let's watch the behavior together. And I'm going to turn on some levels. Now I'm going to look at your questions. Thanks for your patience, guys. Sorry. Please leave a like if you're visiting in YouTube. Hope you get something out of this. How we doing in Trader Lab? Is everybody conscious? By the way, guys, there's a link in the bottom of YouTube. I just can't give you all this stuff like in, this is like a fire hose, right? But what I'm doing is simple. And I know you're probably thinking, it's not. It really is. Here's what's simple. This is shopping. So if you know how to shop, you already got it. The difference is we are in a real-time pricing environment. Your store is not changing prices during the day or in the minute. You see what I mean? So when you go to the store and if something's on sale, you throw a bunch in the cart. It's no different here. If the perception of a retail price is here, buyers perceive this as a bargain. Oh, it's $1 here and I can get it for 50 cents, but it doesn't stay there. It comes back to retail. If we find too high, you want $1.25? I'm not going to pay that. It creates the rotation. Now I have a sweep and I have a location. So we're going to observe this. These are not trade recommendations. All I'm going to do here is show you behavior. And the idea is, if you can understand market mechanics, and by the way, you're going to take stops. Let's get over it, okay? Sorry. I know. Oh, you don't like taking a stop? Who does? But the only way to get a profit here is, same as the casinos, is you're going to pay the gamblers. You have to be happy to pay the gamblers because there isn't a business on the planet that doesn't have cost of production or overhead. When you have edge, you expect to take stops. The gamblers expect to get paid, and they do. The difference is, are you a gambler or are you the house? I find that I'd rather be on the house side of the table than sit with the gamblers. And I sat with the gamblers for years and thought that I just needed to play my game better as a gambler. But the house was still making money, even though I got paid and I got the cocktails and the ticket to the buffet. Wonderful. How can the casinos afford to do all that, pay the gamblers? And I don't see a dealer going out behind the garage and stepping on a rake 2 or 3 times. They just deal the next hand, which means for us, we just take the next trade. You got to know the business you're in. And you cannot make this the business you want it to be. Certainty. Confirmation. Are those words in your language? It does not exist in this business. Okay. Remember, this is where we're going to try to go. And nobody knows, how low can it go? This is the outside edge. So, and it can do anything. So I'll just let you know about me. I'm very patient. I just go and I'm going, I don't know. And if it goes from here to there and takes out the high and I'm not in it, I'm completely detached. The way I look at it is, oh, that's interesting. But if I don't have a trade, I just sit here and wait. And if I don't have another trade for the day, that's my job. Not to make something happen, because that's gambling. Yeah, let's just throw the dice here. Put a little bet down and let's see what happens. If you're doing that, you're on your way out of business. Sorry. But I think you just, you've got to take what you've been doing and be honest with yourself and put aside the random winners. The reality is we all have winners. So it's not the issue, is it? It's not. Gamblers win. It's not the issue. So let's get over the idea that somehow we're going to take a defective process and make it work. It's always going to be the same. So when you're tuning and tweaking and loading your indicators on, you're actually creating the problem, not the solution. The problem is random inputs. What I do here are anchored inputs. Mark, I don't use gamma levels. I don't use spot gamma. I'm certainly familiar with that. I don't need them to trade. I don't use them. Because then it's the more certainty I try to create, the more I actually put extraneous, miscellaneous inputs into the mix. I just don't do it. I went the other direction. I removed everything. If the market's random, I don't want to inject more randomness. That's what I'm saying. Because it's like Fibonacci. It's no different to me. I'm not saying that's right. Support, right? Now, this is not a trade I'm going to take. The problem is this is the outside edge, and would be the target, okay? But this is your support, and this is your outside. It could just as well come out to here. This is the part about mean reversion, very mean. 49 is really an over-under on this thing. So I know if I get long here, this is what I got, okay? And that's the mean reversion. So a trader who's developing, this would be a difficult trade because they don't typically, and I don't call trades here. But that's why I pulled these out. Because I know this right here is too low. I know this area, and it could be there, you see, but it's not. There's no range. So it's got to be out here. And this is the last auction that was too low, this. So if this is too low, this is outside. So then, and I didn't really want to talk about this one, but where are we trying to go, right? This is the mean reversion. Are you guys tracking what mean reversion is? How are we doing in YouTube? Is it making some sense? Are you guys tracking? Getting something out of this? This is what we do in Trader Lab. Not saying it's a good idea for anybody, but you can learn this. And instead of and if you're overwhelmed, which we all are when we start doing this, and we're going to just throw a lot of things against the wall, if you remove the debris and understand what debris is, and then you put pieces back in. I had to remove everything. And, go 10 years of trading and I built trading systems to try to solve some of the problems. The problem was all these random inputs. Because at the time, my goal, and I'm telling you, this is based on beliefs, not based on the business. It was totally erroneous, and I didn't know it. And part of it had to do that when I first learned trading at CME, I took classical bar charting, head and shoulders, measured moves. So I thought it was a predictive business. So then it's going to do this. It's going to do that. Totally backwards. I didn't know. So I say, hey, CME, they know what they're doing. So, and then it was multiple indicators, more indicators, hybrid indicators, and then I built trading systems to manage all the indicators. So I can optimize them and squeeze the risk out. Isn't that what you're doing? Curve fitting, optimizing, squeezing the risk out, looking for certainty. Are you doing that? Well, be honest with yourself. Why wouldn't you do that? Here's the other part. Why wouldn't you? Of course you would do that because you're wired to do it. I'm wired to do it. We are wired to avoid risk. So that means we're looking for certainty. So my thing is when I was building systems and I was managing money across a wide range of asset classes, I needed a system. So I built a system, wrote the code, all kinds of crazy stuff, took years. And along the way, don't forget, winning trades, winning weeks, winning months, but not able to deal with the changes. And here's what the problem, among the random inputs are useless. So that's one piece. But the other piece was the market's not one-dimensional. It goes from directional moves to rotational conditions. And if you're using backwards looking processes, you're not trading today, you're trading yesterday or last week or last month, if you know what I'm saying. Today's as unique as yesterday was unique or the week before was unique. And right now, this moment is unique. This is mean reversion. You see the reversion? That's the mean. So this is outside in trading. And if this fits you, which gives you enough range to scale, where are we trying to go? In here. The next scale, if this is your trade, I'm not saying it is ahead of this, and then a runner. Or Let me give you the or. The or is you take this and the trade's over here. You could be done. You can break this down into any way you want. You need, in my opinion, to understand how the market works. Why are we coming here? Why? Simple. This is your shopping cart. Oh, it's on sale. Outside edge. Back to retail. And what did we find up here? Too high. What about the shorts in this leg? Where's their stops? See? And here. Stops are here. Stops are there. Stops are there. So for me, I don't have any shorts. Other traders in Trader Lab will sell this, and whatever they do, they do. And that's okay because they have a vetted edge. For developing traders, get in alignment with the trend. In the intraday trend, in the intermediate trend, after washing out and testing the excess down below of FOMC is up. What's the higher time frame trend? Up. What does the market do? The market goes up to go down, and it goes down to go up. What does it do in all time frames? The market goes up to go down. It goes down to go up. See? Same. You can learn this. Not saying you need to, you want to, but if you're interested, this is about the business. And I can tell you right now, you come to Trader Lab, it's not romper room. We're here because we wanted to develop careers in sustainability. That's why I created romper room, so we could all have a good time. But I created the Trader Lab because of what I went through when I was learning to trade. If I could go back in a time machine, I could probably cut 10, 15 years off, of my 46 years of doing this. But I had no clue. Everybody was a floor trader back then. There were no off-floor traders. They all thought I was crazy, and I actually thought I knew what I was doing because of the random winners. Turns out they were right, and I didn't know I didn't know. That was, and I created a term called Trader Groundhog Day. Work hard, wake up in the same place. Is that you? Work hard, wake up in the same place. So here's the deal with this thing. If you got long, this is where you're going. This is the primary objective. It's called mean reversion. That's the mean. So then if I can stay above this thing and come out here, then I've got the other side. These guys, the stops, that's my objective, to get these guys in this leg out. And then if I can get into yesterday's range, which of course, who knows, this 92. Not, just saying. And by the way, you're asking me, Tom, how do you know that? I don't know anything. But let me tell you what I do know. What do I know? There's about a 30% probability. That's pretty low, Tom. Why would you go for that? Same reason this was important for the short this morning. Same reason the 49 was a target. Same reason if I'm under 49, I'm going south of the border. Same reason if I'm over 49, I may be going north of the border. Same reason if I break through this and test it long. Same reason that I can fill the gap. And the overnight mid for your dining and dancing pleasure has a 68% probability. Past performance not indicative of future results, which gives me this. And testing the previous day's high or low, 68%. Bing, 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 bing. And then 30. But if I get in here, then I got that. If I don't, and I can be done with the long anywhere, or it takes me out on trade management. Is that making some sense? This is what we do in the Trader Lab. It might drive you crazy, but it happens to be called trading. Mark, do we all trade differently? Yeah, we all do. There's no, it's a psychological alignment. We all trade differently in the Trader Lab. There's not one way to trade. I trade differently than what I'm doing here in the stream. But it's all derivative of market mechanics. I mean, I'm showing you broad strokes in the stream. A trader never needs anything more than this, in my opinion, if they know where to trade, and if it has an edge that favors them over time. We all take stops. So I take a stop. So it's like, huh, that's interesting. And then what I have to evaluate myself. Did I do what I was supposed to do, or did I miss something? Did I make an error? What happened? That's it. There's traders in Trader Lab are going to take shorts up here. Me, I don't do that. I just stick with the side. And if my trade, this trade here, if risk neutral, if I get taken out, then I go, okay, that's it. Then it's, where's my next trade? And it could still be out here, outside. There's no precision. It's just rotations. So when you're using Bookmap, Bookmap is a high-tier order flow tool. Now let's look, speaking of order flow. So we have stops under here. This is the VWAP. We have a structured trade called VWAP to VPOC. This is a aggressive trade that somebody might take because it's out in here. This is the same trade. So we're going to see. And it's not a recommendation because, look where the liquidity is. So, and it's at another outside edge. The thing with reversion trading, and, it's mean reversion. That's the mean. And the joke, and I always like to say this, yeah, it's mean. What's mean about mean reversion is where's the outside edge? And that's very difficult for us because what do we have 100% of the time? Not only randomness, but uncertainty. So I don't know. So what do I know here? There's the sell stops. This is how the stop and iceberg detector give you some further insight, and they were absorbed. There's the icebergs. So am I going to come right back here? Let's see. This is what's testy about mean reversion. I call this a stop pick. Stops, microstructure, back here, right? Now, this is still not a trade anybody ought to take unless it's vetted, you see? So it's just up to you. And where are we? Our 60, our 61. This is the same. The fact we come under here is what? An inventory grab in a microstructure. Stops are here. Write this down if you haven't thought of this. Think like a retail trader. Don't act like one. Where do they put their stops? Let me ask you this question. Why would we put our stop here? Think about it. What's the answer? Tell me right now. If we were sitting together, what would the answer be? I'm going to give you some choices, multiple choice. I don't want to lose. I don't want to lose any more than I need to. If it takes this out, it's no good. I don't want it. Really? Is it because I don't want to lose? So you tuck your stop right there. What happened here? Here's something for this astute group of traders. What happened here? There were buyers, weren't there? That's absorption. Sellers, if it doesn't go down, why not? Absorption. What? But there's stops here. So you put your stop with everybody else. What happens here? Stops. There's your stop. But what else is happening here? If this is a heck of a deal, the guys in the supermarket are over here who went, oh, the tuna is on sale, and now the market comes down. Are these buyers who absorbed here going to show up again? Maybe. You see? So, and that doesn't mean, of course, you won't get stopped out or this is trading. I don't put my stop there. Too many times, have you ever said they went for my stop? Here's a question for you. Is it possible you're putting your stop in the wrong place? It's a question. And because of randomness, sometimes yes, sometimes no. What I find, and it's not a recommendation, you have to vet this, is I'm not putting my stop with everybody else. I am getting risk neutral. You see? So if I get long, this is where I'm going. In the range from entry to failure I have to have enough range going this way to cover my risk. My stop is not there. It's got to be outside, under here. It really has to be under here. Because this is the last high volume that we went too low. So then when I come outside, I'm only trying to come back there. So I would take longs back to here. And of course, it's not a recommendation. Now, if it falls out of this and gets under here, then it's back in the Barca Lounger. So let's watch the behavior. Is everybody tracking? Ben, I don't necessarily wait for stops to come out. I understand market mechanics and retail trader behavior. Take your experiences, Ben. That's what I had to do. I just had to say, well, why? Why? Why did it come under here? Are they out to get me? Is that it? What do we always think? We're victims, right? They did it to us. Well, maybe we're doing it to ourselves because we don't understand market mechanics. Why does the market come down and into these stops? It's not because somebody's out to get you. It's not, I don't have a victim mentality. I have a it's up to me mentality. So I'm not a victim here. I'm only a victim of myself if I don't follow my plan. The outcome is always random. And so here's what I know. I know I have my buyers here. And I know I got my buyers here. If I can stay above this absorption after the pick, then I got this. And if I fall out below, then the trade does what it does, and I wait for the next bus. This is like getting on a bus. So while we're hanging out here, waiting for this to ferment, this is the objective, and it's not a trade recommendation. I take stops. There isn't a trader in the Trader Lab that doesn't take a stop. So if you're looking to avoid, not you, Ben, collectively, we want certainty. It doesn't exist. What we have to understand is market mechanics, how the market works, why it went from there to there. If we can understand that, we can understand why it'll go from there to there. You see? Now, if it will go there, why it might go there. The best you have is maybe. Maybe it'll get there. Maybe it's going to come out under these buyers that absorb. See the icebergs? This selling, these stops, were these guys, because that's where the stops are. And if I don't get continued selling, then what about, if I can hold above this, I can come here and come out the top. If I fall down again, then I go back in the Barca Lounger and wait for another location, which might be out somewhere out in here or not at all. I just sit back. I've gotten, and this took a long time. When you don't have a plan, you're going to be making it up as you go. And all that is emotional triggers. FOMO, revenge trade. The lunatic is in charge because now it's emotional stimulus. It's not trade plan. So when you come to Trader Lab, the idea is the market is 100% random. If you can accept that, then you cannot be random. The outcome of any trade is random. This trade doesn't, this is. So what would happen for me is if I'm out here, which is where this thing would fall apart, and I get my scale here, if it has to fall apart. Now, maybe it will, and we'll get an extension down here. Then the trade's over. And if I didn't get risk neutral, I'll take a stop. Or I take a small loss if I haven't covered my risk 100%, whatever it is, it is. If I get long here, then I would take a stop. And I go, oh, that's interesting, and go on from there. That's the way I have to see it. I certainly would not take a trade if I knew what was going to happen, if I was going to take a stop. I'm sure the casinos wouldn't deal a hand where they pay the gamblers if they knew. So they can't know, I can't know. So that's where the trade plan comes in. The point I want to make about trade plan is when you come to trade in the Trader Lab, assuming you want to develop a business, there's nothing left to chance about what you will do. Nothing. Not one piece. What is left to chance is what the other participants in the market do and what the outcome of the trade is. So you cannot come here without a plan. So the plan is built to support you mentally because you can't go, what should I do? If you can't answer, what should I do? Then you don't have a plan. If you're going, should I be getting long or do I get short? or do I bail out? You don't have a plan. You can fix that. Or you can choose to keep doing what you're doing. And of course, if you have consistency and you're a profitable trader, then keep doing it. So what do I know? Why isn't my stop there or even here? It's got to be under here. Remember? And again, I take stops. And I have to tell you, I haven't, gotten thrilled over them yet, but I've gotten pretty detached because I look at this like if I put a trade on wherever, it's like a curiosity. Is this going to work? Is this one going to work, or is this one going to take the stop today? But if I know I trade where I think I have a good chance of getting risk neutral, wherever, and I will take stops. So, whatever it does, it does. But I also know where the trade fails. It's going to be out here. It's not there or there. This is an outside edge to come back here. So the trade fails, it fails, and that's it. And I do see the selling. I'm seeing it, and it's just the way it is. So now we're back at VWAP. And, one of the things about this, I know this is a support area because it's high volume. This is an outside edge. I can also, if I get below here, then I have this. I have another area, and I have the liquidity. I'm aware of it, so I just know if I get taken out, then I'm going to still be stalking, and I'm above my 49. It just might put me in a different location. But that also increases my range to come back to the mean. So when I'm looking at this, I'm always thinking about, well, what's the worst that can happen? I take a stop. Okay. Do I go behind the garage and step on a rake? No. What do? I wait for my next location, and I know what's out here. If I still come out here and I get a trade off, I'm looking for this. So right now, just see what it does. You guys have questions? I got a couple of minutes still. How are we doing in YouTube? Please give a like if you're visiting. Support the channel. Encourages me to continue doing this. There's no cost for the Trader Lab. But the Trader Lab's not about me. It's really about you. And you also will gain access not only to the Trader Lab community, but all the resources in the Bookmap server. There's education on stocks, options, crypto, of course, order flow with a high-tier tool like Bookmap, market maker behavior, algorithmic behavior, a lot more. There's also the Bruce's pilot program, how to extract an edge. There's tools in Bookmap you're probably not even aware of. I mean, this is like, to me, it's like hidden gold. Let me see if I can find this thing for you. Oh, that's not the one. Here. Still not the one. There's a lot more tools. Trading statistics. Footprint. Anybody into the footprint? Liquidity marker. Where's what I'm looking for here? Multi-account trading. You guys that do funded accounts, right? Where is this? Oh, setups checklist. Here, look at this. This is just an example. Let's say you're trying to imprint on your brain, a process. Let's call it mean reversion. You could actually open this up when you anticipate a situation showing up, and what are the elements that you need to check before you put the trade on. This is what the trade plan is about. You're not making it up as you go. You anticipate your trades and where they might show up. You don't know what's going to happen, So you could have this. Then you can record and you create each one for each different trade you have. In Trader Lab, the mean reversion would be it. And then you can use the trading statistics, and it would show you, you'd have stats, and you can, for everything. And it'll give you pie charts and all that. It's all included in the Global Plus. You got all this stuff and a lot more. But again, for this stream, and I'll tell you, I keep things basic. I find more does not create more certainty. It creates conflict. But every trader finds their edge and can define the market in the way that makes sense to them. So where are we? VWAP. Outside edge still. And look where we are. We're still above the high volume. So we got to see what it's going to do here. So right now, this for me is what we call muddy waters. You've heard of Muddy Waters? Blues guitarist? Muddy Waters. VWAP. So we got to see if we get any buyers in here. Right here is kind of important to see what happens and to see if we mean revert from here. Microstructure, outside edge. The thing that makes trading, of course, difficult is the randomness, and you don't know where any location is. So this is a potential area to observe. And this would be the objective if it gets some gas in the tank. So let's see what it does. I only have a couple minutes. I got 4 minutes. Let me remind you, there's a special Trader Academy coaching special event going on. It's in the special events area. You can go there if you use the link in the bottom of YouTube. Check it out. Also, Bruce's pilot program. It's about specifically creating edge, using the tools in Bookmap to help you develop expectancy in a trade plan. And again, no matter what you see anywhere, you have to kind of find the pieces that you relate to. This is long, by the way, in the Trader Lab. Here's your trigger. Here's your location. Here's the outside, right? I don't remember. And you got to clear this stuff, to get back here. But we're trying for is reversion. And, if I take this trade, I take a stop, whatever it does, it does. I don't worry about it. Worrying has never helped me. So I just go, well, that's trading. The link in the bottom of YouTube, by the way, use it. The Trader Lab is a community of like-minded traders who've come together to leverage their collective experience. It doesn't matter what product you trade, how you trade. Magic 8 Ball works as good as anything else, right? We used to have one on the trade desk, and it was as good as any trader, I'll tell you. The only thing is you'd say, should I get long? And it would say, ask again. Or maybe. I don't know. I haven't used the Magic 8 Ball, but it's as good as what many retail traders do. It's as good as anything else. So we have to see here, and we'll know very shortly, I think, on this structure, whether we're going to extend. We will find out very soon because I'm watching the structural development, and this is a key location. So you guys can watch it. I am out of time. Please leave a like in YouTube. It support the stream, encourages me to continue doing it. I hope you get something from this. Visit the Trader Lab. Use the link in the bottom of YouTube. Take advantage of all the education that's available in the Bookmap server. There's no cost for it. You don't have to be a Bookmap subscriber. You won't be abused or solicited, but you will be in a serious community of traders who are looking to build out the business and create sustainability. If that's of interest to you, visit the Trader Lab. It might be one of the most important stops you make on your journey. Thanks again, guys. Look forward to seeing you tomorrow. Have a great day, and thanks for visiting the Trader Lab.
7, 6.